Hello everybody, it's Stock Guy 22. Wanted to review some charts on the Dow, the Nasdaq SPY and Apple. Since we haven't had those Sunday and Monday night sessions, I thought I'd do it this way here so they'll be a lot quicker and we don't go into those 3-hour plus webinars. If you have questions on individual stocks, I'm going to be posting these right on YouTube, so you can actually put a message right on YouTube, and I'll pick a few different charts that people ask about, and post my recap on those type of charts. So let's start with the Dow here. Okay, as you can see, yesterday we hit above that resistance. I was watching that 13,300. I thought the way we were leading on Friday, which was this candle here. Okay, this third one over, it looked pretty strong. We had actually took a little bearish stance on the SPY into Monday, and we actually sold it off and then rolled it up again. We were down a little bit yesterday because we were breaking through, but then we did another short play. It looks like this morning we're selling off a bit with the futures, so we're going to be down a bit on the Dow today. So it was really a test above resistance, and it looks like we're going to drop back a bit this morning. So I wanted to just go through a few notes on here so you can see what I'm looking at for the Dow chart. Oops. And why this is important is if you trade a lot of New York type stocks, it's good to know where at least the market's going or where it is in general. Okay, we've had such a nice run, as you know, from what you saw on the other chart, but this is the level that I was that we were looking at. Okay, to see how it handles. So as you can see, we actually went above it yesterday, but actually closed below it. Okay, so what's kind of like tricky with that 13.3? Initially, it busted right through, found some resistance, sold off a bit into the close there. Okay, now the areas that we're going to be watching is for another break above 13.3. Doesn't look like it's going to happen today. We're starting to drop off a bit. If we do drop back, look for around 13.2 for the next major level of support, and then further down towards this 13,000 area, which has caused us a little bit of back and forth action. You can see where we almost triple topped up here. Okay, right here, here, and here. Okay, that's why we were watching that level so closely. So it's almost like a ceiling on the stock. In this case, it's the markets. Okay, the Dow, and you can see it had a little bit of support at the 20-day. So that red line there is the 20-day. Once we broke through it, we went to the 50-day and slightly below. We did a nice double bottom. Okay, so what a double bottom is, after a big drop, you look for hammer candles, tweezer bottoms. If you don't know what any of this stuff is, we do have it on our site on other videos. Okay, and we'll be doing more videos into the future on these specific signals like this. Okay, so basically we bottomed out, came back up, had some resistance at the 50-day, at the 20-day, dropped back down, and then we broke through again last week. Okay, so we're actually quite strong into here, but we are resistant. So I was considering taking some positions off this week, especially we're coming into May. So if you have any positions that you're up on, this is not a bad area to do it because you are into resistance. Okay, and it looks like we're dropping back a little bit this morning, so you're going to find a lot of positions are down from what they were yesterday. Okay, so that's for the Dow chart, and again, as you can see on here, we've had an amazing run through from really October 4th all the way straight up. Okay, with that little bit of a dip into November. Okay, for the most part, we stayed above the 20-day. So a real concern would be a drop under the 20-day, which is almost like a crossover here with the 20-day, 50-day. The pink line is a 50-day moving average. Red line is the 20-day. Okay, and that offered nice support and buy points at or below that area. Okay, to reposition your stocks and to also sell into these type of key resistances we're having right now. Okay, so let's look at the Nasdaq. Nasdaq, not quite a resistance. Okay, as you can see on here, again, same type of run from October 4th, which was right here. That's when the market bottomed out, pushed up, had a much bigger drop into November. For the most part, though, stayed above the 20-day. Okay, 50-day was like the major support. We only went underneath it for a few days and then it came right back up. Okay, that coincided too with that Apple earnings because it has so much of the Nasdaq. I believe it's 20% at this point. So Apple comprises 20% of the Nasdaq. Okay, so that's why it has such a big impact. Apple was dropping back yesterday. Nasdaq was dropping back as well, as you can see. So this is a shooting star that formed yesterday after a pretty big run. See, same type of double bottom on the Nasdaq as we saw on the Dow. So let's look at that as well with a few notes. Okay, so that was a double bottom. In this case, this is a tweezer bottom. Okay, so it's just two candles that look like tweezers, and it shows you when a good bottom would be. Okay, to pick up stocks. Same type of thing if you get a big push up to the upside. If this had happened after this big run, you sort of had it up here, not as big, but those are usually signals for top, and it's great strategies to use for closing out positions and then re-entering again on further dips. So again, as you can see, for the most part, we stayed above the 20-day. 50-day offered some support, but there was a couple days in between there that we dropped underneath. Okay, pushed right back up. So what's our key level? We're going to be watching around this 30-30 area. Okay, that's again where the 20 and 50-day are coinciding. Any drop below that, next major level would be this 3,000. That's a psychological level as well. Okay, but you can see we haven't stayed underneath it for very long. If we did drop back and stayed below it, that would be kind of dangerous. Okay, then you'd have to probably do more shorts on any type of bounces. Okay, so as you can see, not a bad looking chart. Pretty easy to read. We didn't quite get to that 3,100 area. If we did, we would have been looking for resistance up here or for a further breakout. Okay, that didn't happen, and we sort of dropped back, and the shooting star yesterday was a pretty good signal of that. Okay. Okay, so that's the Nasdaq. Let's look at SPY, which is going to be very similar to the Dow. Okay, pretty close to that resistance. Didn't quite break through like the Dow did. Okay, but as you can see, it did drop back from the high. So very similar to what the Dow did yesterday. Again, we stayed above the 20 days, similar to the Nasdaq. Okay, for the most part, 50-day offered extra support. Couple of days in between here that we were below it. Okay, like well below. Most of the time we were staying right above and hugging into this 50-day. Popped through the 20-day last week. Okay, and as you can see here, pushed up a little bit. Got pretty close to that resistance. Okay, we were worried about a break above 142 on the SPY. Okay, but we felt that would be resistance, so we actually added a play yesterday that could give us some protection if we drop back. Okay, just because we had done some option plays with in our chat with Assassin. He's like our in-house option specialist, and might work out for us this morning nicely to get that protection in there. Okay, so that's the SPY chart. So again, very similar, as you can see, pretty close to that resistance, that 142. It got to 141.66 yesterday. So it's kind of scary the way it had gone so strong, especially if you were short or trying to short the market. But we'll be watching this 140 level today and further down that 138.64. Again, see how the moving averages are coinciding? If we get a big retrace, these are going to start pointing down, all these moving averages. Okay. So again, the red one's the 20-day. This is the 50-day. These are simple moving averages. You can add them on your charts, but you can see why I like them. They're very easy to understand, and you can see where your buy signals and your sell signals should be. Okay, at least your buy signals for your 20-day. Sometimes you could extend further, and you're not sure how high you're going to go up. Okay. And lastly, let's look at Apple. And Apple, as you know, it's been parabolic. Okay, but it has had trouble. Okay, lately. So the last 3 weeks here, it's been like a pretty tough mover. It's been very volatile. We haven't seen this type of volatility in like over 2 years. So some of us that were trading options got a lot of volatility this week here. Okay, we were up and down and up and down. Okay, then we came right back up. Look how perfect we hit into the 20-day. So we were actually watching this level here. Okay, I'd been picking up as we were dropping back. Okay, on Apple, I would have been buying into 550 as well. My concern would be this morning it's just under that 580 area. It's at 579 as I'm doing this video right now, 579.15. So it's slightly below the 50-day. We don't want it to go too far down than the 50-day. You can see here it did go down but came back up with these little tweezers. Okay, so again, let me do a chart so I can put some notes. So I know a lot of people trade Apple with us, so I don't mind to review the key levels on it. Okay, we had gone bullish on it yesterday, even though it was very weak. Okay, and we thought, okay, even if we go a little bit further down, if we hit that, if we stay above 580, and that's the level I'll be watching for today, we should be okay. If not, then we're going to probably close this little gap into here. Okay, so again, you see the little tweezers that formed here? Gives a good signal about the that was just into earnings, and we gapped right up. Okay, high up here is, I believe, 644 and change. Okay, sort of resistance around the same area at around that 620. Okay, but we're caught into this little pocket here between the 20-day and the 50-day. So if we get a push up, we're going to try and play it to 605 to 620 max. It goes back down. It could retest towards that 560. So there is some news about that, those e-books and Department of Justice news that's probably been putting some pressure on it. Other than that, I still think it could bounce back up. If we got up to this area, I've got two positions on it. I've got a core position on Apple, and I've got the swing position. If we pushed up above the 620 to 640, I'd actually be scaling out at that point and looking to sell my position, but keep the core going, and then I'd look to rebuy again. So I hadn't played it as a swing for quite a while. I missed some of this move all the way up, okay, but I did play it quite nicely prior to that. So people were telling me you're never going to get a chance to rebuy Apple again, blah, blah, blah. And as you can see, we did get a chance to rebuy on a dip. Okay, slightly down right now. I still need just under $600 to get back even on it. But as you can see, it's not bad. It's not a hard area to hit. Okay, but we will be watching this 580 closely this week. Okay, if we did start to drop back strongly, probably get some protection to protect my stock position with some options. Okay, because then we could test towards that under that 560 area. Anything under that, I'd be a little bit concerned, but I'd be looking to buy into 550. I doubt we're going to hit the 200-day again. That would take us down to about 450. Unless we had like some major bad news or major market news that would push us down. Okay, but it is having trouble, as you can see here, because it's sort of double topped at that 620 area, and we did peak at that 640s. Okay, so some things to watch on this. I'm still bullish on Apple longer term, but just be aware that if you are playing weekly options or you are playing options in general, make sure you're aware of this crazy volatility that we've had recently. Okay, because you're going to have a harder time, as we did that 1 week where the action was so volatile. All right, guys, that's about it on this, and hope you learned from these videos. If you want to join our group, just go to stockguy22.com. We've got more videos on there if you sign up for free membership. And again, if you want me to review any charts, sort of like I did with these, just post them in the comments below here on YouTube. Okay. If you're watching it somewhere else other than YouTube, you can always email us and ask for a request, and I'll try to get a video up. Talk to you guys soon. I hope your trading goes well.